Emerging markets ETFs slightly higher year to date, but with ongoing worldwide volatility, there seems to be some major cracks in the system. Jared Blikre joins us to break down what's impacting the global economy. Hey, Jared.
Hey there, Rochelle. And as you can see, I got three things to talk about. Number one is China. Number two is the Fed, and we can expand that really to all central banks. And three is what's going on in India with the Adani Group, and we can expand that to include lots of other securities. And I'll get to that in a second. But first, let's start with the U.S. dollar index. This goes back to about mid-2021, and we can see this huge rise last year. And this has to do with a repricing of Fed hawkishness in the U.S. And because the U.S. has higher interest rates relative to the rest of the world, guess what? Lots of capital flowing into the U.S. to buy our bonds and our risk assets. Well, that accounts for the strength in the U.S. dollar, and that means emerging markets were suffering under that regime. But as you can see, the U.S. dollar has come down since then. It's flagged a little bit. That has provided some support. So if we take a look at the global indices here, and I'm going to give you the year-to-date percentages on the global stock market indices, we can see in the forefront, NASDAQ composite, that's up 14%. And in fact, most of the markets on the top row, and that will be France, Spain, we have Korea, we have Germany, we have Mexico. Most of these, excluding Mexico, are actually developed currency worlds or developed market currencies and indices. On the bottom line, we have some of the undeveloped markets like the Bovespa, that's down in Brazil. That's down 9% this year. Brazil took a lot of their pain early, and they were raising rates back in early 2021 when nobody else was thinking about that. But again, they've been hurt disproportionately by what's been going on with the central banks and the Fed raising interest rates. Now we got to get to China. China has kind of been its own deal, of course, with the lockdowns and then only reemerging late last year. It's been a different story, and they're finally roaring back. And you can see a lot of the members of the Chinese NASDAQ Golden Dragon Index here have been performing quite well, and some only mediocre. And in fact, the China story got started way back last year when a lot of tech was still getting decimated. I think traders got ahead and were thinking about the opening. Well, the opening is here. Is it bigger or less than expected? I think that's what we're seeing playing out on this stage right here. But you look at some of the commodities markets, gold is surging to new highs right now, or close to new highs. But copper, the industrial metal, that has been flagging. And if I can find HG on here, let me see if I can pull that up. But anyway, the copper metal market, Dr. Copper has been saying, no, we're not necessarily buying the demand turnaround just yet. Finally, what's going on over in Indonesia with that market? There was a huge short report issued on all the stocks that are basically have any affiliated tendencies with the Adani Group, and that is basically a huge part of the Indian stock market. And here's a 2-year view of the Bombay Stock Exchange, moderately off of its highs here. But when you have a huge credit expansion like we had in 2020, 2021, the fiscal reaction to the pandemic, the monetary reaction to the pandemic, huge excesses and imbalance can build up. And if there's any kind of notions of fraud underneath that, well, guess what? When you have a deflationary environment such as these, those things get priced out of the market, or I should say priced into the market by those prices coming down. So we're not only seeing this play out in the Indian stock market here, we're seeing that play out in the U.S. stock market as well. And we're seeing all kinds of short reports coming to the forefront. So the bottom line is all of the machinations of the central bankers to deal with inflation worldwide have really been weighing on emerging market economies. And because they are not necessarily the tail that wags the dog, they are the ones catching the cold when America sneezes and when the developed nation sneezes. They are unfortunately have received the forefront of the brunt of that movement.
Certainly a fantastic breakdown there, especially of the repercussions that we might still continue to see. Jared Blikre there for us.